Cathie Wood is selling Tesla stock again. And before I get hundreds of comments below saying things like she had to, this is clickbait, and it's against the law for her to own more than 10% of a stock, you are all wrong. According to ARK's prospectus, the company can invest more than 30% of their holdings in a single stock like Tesla, and ARK can own more than 20% of a single company. So ARK didn't have to sell Tesla. In fact, they could have bought lots more. Considering how bullish Cathie Wood has been on Tesla stock in the past, and the fact that she didn't have to sell today makes me wonder, why is Cathie Wood selling Tesla stock now? A clue might come from the last time Cathie Wood sold Tesla stock near the end of January. At the time, Tesla shares were trading near all-time highs, close to $900 per share. A few weeks later, Tesla stock crashed to a price under $550 per share. That was a decline of over 38%. Is Cathie Wood selling because she thinks Tesla stock is about to crash again? First, let's examine the selling. On Wednesday, April 14th, ARK reported selling over 185,000 shares of Tesla in the ARK Innovation ETF and over 57,000 shares in the ARK Next Generation ETF. Both sales were the largest in terms of weighting on the given day. On the same day, Cathie added significant stakes in Coinbase, which went public last week via direct listing across several of the ARK ETFs. On Friday, April 16th, Cathie continued to sell Tesla shares, shedding over 86,000 shares from the ARK Innovation ETF, the only sale of the day from that ETF. And again, Cathie Wood bought more Coinbase shares among other stocks. What could be going on here? First, we must understand how ARK ETFs work. The company relies on investors buying shares of the ETF, which creates inflows of cash for ARK to invest in stocks like Tesla. Historically, ARK Invest inflows of capital have been strong. According to trackinginsight.com, a website that tracks inflows into ETFs, ARK's flagship ETF, ARKK, has daily inflows of about $164 million. Over the past 3 years, ARK has virtually zero outflows, but in 2021, that has been different. After total return of the ARK Innovation Fund was negative in both February and March, ARK saw days of significant outflows during that time. The fund has since rebounded in terms of inflows. However, year to date, the performance of the fund is essentially flat, while the S&P 500, Dow Jones Industrial Average, and the NASDAQ are all up on the year. Could Cathie Wood be worried that performance of the flagship fund will continue to lag the broader markets and therefore cause less inflows into the ETF? I think that's possible. Given that the fund performance is often tied to inflows, it would make sense that the ETF loads up on stocks they believe will perform well, making the sale of Tesla stock concerning to those bullish on Tesla, at least in the shorter term. The fact remains, though, that ARK still owns a significant stake in Tesla across several of the ETFs. And considering the sizable advantage Tesla holds over other EV car makers in terms of cars on the road, battery and self-driving technology, along with a supercharger station network and more, Tesla's best days as a company are likely still ahead. However, due to computer chip shortages and supply chain issues, Tesla has dramatically cut production of the company's Model S and X vehicles, likely impacting the company's ability to reach revenue and profit estimates the longer those chip shortages last. Considering ARK needs to worry both about the performance of the fund along with attracting inflows of investors, it's possible Cathie Wood feels that at least in the shorter run, there are better investments out there than Tesla. Luckily, as an individual investor, you can have your own time horizon and you can buy and sell stocks based on your own outlook. Given that you can track all of Cathie Wood's trades and see everything in her entire portfolio, it actually seems foolish to pay a management fee and be subject to shorter-term goals that the fund might need to reach in order to maintain investor interest in inflows. In my opinion, Any dip in Tesla shares has always signaled a buying opportunity, especially for the longer-term investor. Let me know down in the comments what you think.